at REITWeek 2013 in Chicago, and joining me today is Stephen Grimes, CEO and President of Retail Properties of America. Thanks for joining us today, Stephen.
Thanks for having me.
Your company recently celebrated the one-year anniversary of its IPO. How would you describe the past year, and were you able to meet all of the goals that you set out to achieve?
We actually did complete our first year as a publicly traded company, and we're very excited about the progress that we made, both from a stock performance perspective as well as from an operational perspective. In fact, I would even argue that we've exceeded our own expectations. We set out to achieve some simple goals, but very large goals, and with our IPO and our preferred issuance in the tail end of last year and the sale of $500 million of non-core assets, we were able to delever the balance sheet and meet our longer-term objective of 6 to 7 times EBITDA in just one short year. So we're very excited about that because it positions us well for our plans to become an investment-grade borrower, hopefully by the end of 2014. This said, it's given us the ability to lower our cost of capital and be in a position to be more nimble on the left side of our balance sheet, which will help us in our repositioning plans for our multi-tenant retail portfolio.
Where are you in regards to your company's portfolio repositioning plan, and where do you see as the company's ideal portfolio composition?
That's a great question, because that's kind of the next phase of our existence here as a publicly traded company. We have defined what our objectives are for the multi-tenant retail portfolio, and as I had mentioned earlier, our ability to be a little bit more nimble on the left side of the balance sheet now has positioned us very well to start executing on those plans, probably even a little bit earlier than we had hoped. We had announced that we look to ultimately become very concentrated in 10 to 15 markets. As an example of that, our Dallas portfolio we've mentioned in the past, we have 22 assets in a 30-mile ring, and what we see there each and every day is our ability to manage and lease and drive value of those assets in such a concentrated fashion is much easier to come by. This said, 10 to 15 markets from, call it the 35 states that we're in currently, is going to take some time. So we're going to look to be very disciplined and measured in how we go about doing that, hopefully having some meaningful progress over the medium to longer term. But until then, our acquisitions will be focused in the 10 to 15 markets that we identify, and the markets that we look to exit will be looking to dispose of assets. So things are well underway. Lastly,
what changes have you seen from retailers in terms of space usage and needs?
Space needs and usage is always a hot topic with the retailers these days, but the lack of supply is really limited, the concern in that regard, I should say. What we are finding is that the retailers over the past several years have looked to manage their margins, and managing the margin is helping to pay the rent, which is obviously a good thing. So they're looking at their footprint and their space usages, and they're trying to rationalize, the size box that they may have. But by and large, those retailers that had hard mandates to reduce their box size have really done so already. As an example, Old Navy was looking to reduce their box size about 10 to 20%, and for the most part, where we could accommodate them, we did. But other retailers that have soft mandates to reduce those box sizes really haven't done so, and it's largely due to a couple of reasons, ranging from they like where they sit in the center to just the lack of supply not giving them options to relocate. So there is a lot of discussion about space usage and demand for space, but the lack of supply is really helping to keep those tenants in our spaces and working with them and optimizing what it is they're intending to do.
Thank you for joining us, Stephen.
Thank you very much for having me.
I'm Carissa Chappelle for REIT.com.